Hi everyone. This is today. I have a surprise guest for you. We have Sumit Agarwal from our team, a dear colleague of ours. Sumit currently he's a chief manager for derivatives as a product. So all the great new tools, new fun things that you're seeing have he has executed them.
So thank you, Nitish, for having me here. Thank you.
Yeah. So, guys, today's webinar is exclusively for rank beginners because I was as if you have seen all three of my previous videos, we have built the entire we are building everything from scratch, right? We are in the very first video we saw how what are APIs, what is an SDK, how to install it. So if you guys want to get set up for your for using APIs, you please go and watch the very first video where we talk about what are APIs, what are SDK, what is a virtual environment and why it's necessary, which programming language to use, and which this thing IDE to use. So even for IDE, we looked at VS Code and we looked at Jupyter Notebook, and we decided to go with VS Code. So if you want to see all those reasons and the thinking there, for the technical getting started, it was in the very first video. The second video in the playlist, it it will show you how to get started with programming. So we looked at how to get connected with Breeze API, how to create a session, what is a session, and how to download some data, right? Third one, we continued that. So we assume that once we have a set of data, which in the second one we also learned how to save data to your local folders so that you can read them again for later use, right, as a CSV. In the third video, we saw how to pick up that CSV and how to do analysis in Python using Pandas, right? So in today's session, so a lot of people and a lot of colleagues of mine, I mean, like Sumit and others in our office, who watch those videos to help them get started. Uh, they were like, Nitish, all that is fine. Okay, thank you for that, and for getting us started with the technical stuff. And even some of the people like Mudit, who
Yes,
knew
yeah.
how to program and all that, even he did not know the benefits of using virtual environment, right? So he was like, okay, I knew the tool to my toolbox. Yeah, I've learned Python. I have wonderful table or chair.
Right, right.
So table what is the end product, right? So
Right, right.
So when you start making something, you have an end product in mind.
Yeah.
Right?
Yeah.
You have an end product में चार पैर होने वाले, एक फ्लैट होने वाला है, बैकरेस्ट होगी नहीं होगी, आर्मरेस्ट होगी नहीं होगी. आपने अगर सोचा है, if you have visualized your product, your end product, only then can you effectively use those tools to make it, right?
But the first question comes is, end product, what is going to be that end
Exactly.
product? So how to go about that?
How to go about that, and how to visualize and how to make the journey there. So then once you visualize the chair, then you can think, I have to cut 4 legs and I have to cut one board, right, and I have to make some holes for the screws, right. So then that can be learned, right?
Yes.
Through trial and error.
Yes, yes.
Right. So now that is what we are here to discuss. So how do you think about strategy? All your life you've been trading based on, I don't know, many people trade based on some lines they draw on a graph or a chart, or some people put like support resistance line and they trade based on that. So how does a person like that start thinking about algorithms?
Right, right. So basically, from the plain scratch of paper, like the white paper is there, then how to at least
who has an email-based dedicated support for API. It is Breeze API @ ICICIsecurities.com. I'll say again, Breeze API @ ICICIsecurities.com. Okay. So let's get started. So how do you think about strategies? How do you come up with them, and how do you take them live?
So just before we proceed with the session, I mean, if there is any questions from the audience, you can put that in the chat box in the YouTube, and we will be able to take those questions later.
Yeah.
Right?
Yeah.
Okay.
So yes. Yeah. So let's get started. So how do you think about strategies? So let's first look at what you have to do, right? How do you get into that space? Now, a lot of if you Google for this, if you Google for steps in algo trading, usually you will find I think 4 to 5 steps. They will usually start with getting data. Then they will say that you analyze the data. Then they will say that you code for backtest. Then code for live, and then it'll say refine the live, and then come back to hypothesis testing.
Okay.
So it's like that loop. But I have slightly changed it because in my experience, it's usually slightly different. Okay, so I usually approach with hypothesis building.
Yeah.
Okay, hypothesis is nothing but your own theory about the market. If X happens, then Y will happen. If X and Y happen, then Z will happen.
Yeah.
Right. So if Z happens, then I take a long position or short position. I buy or sell. Right.
Right.
So coming up with this idea, these events is usually my first step. Right. This now for many of you who have been chartists, right, who have been drawing lines on charts, you know the power of observation. You probably have a very strong power of observation. So yeah, is there any way to copy or replicate some expert strategy? But we will come to that. I mean, that's what we just want to talk about. So one way is to observe the market, and people who are good chartists, they have very strong powers of observation. Yeah. Right. The other thing is to study the data, which is same thing as looking at chart, right? I mean, that's pretty much same thing. You can read articles and books because different articles, at different times, different strategies have emerged. Like post COVID, 920 emerged. Now it is only because I was on Twitter, and I was following some good traders that I heard about the 920 strategy for the first time.
Even I have read about lots of blog articles that are available on the online, and I mean I've gone through plenty of blogs, and that's how I even learned how to build an hypothesis and like that.
Yeah.
So you come up with all the ideas by simply reading it, and while you're reading it, you come up with the new ideas at the same time.
Yeah, and many people, they are openly sharing things. So like something like 920, if people had not talked about it and shared about it, we would not know about 920.
Exactly.
Right. Similarly, I think ORB, Open Range Breakout, has emerged in the last 5 years ago. The ORB was unknown. Okay. But people did. I mean, I think it was some expert trader who was giving an interview on money control. Money control has a series of these things, right?
Yeah.
So money control, then they got to learn that there is such a thing as open range breakout strategy, right? So people share. So the more you read, the more you learn. Okay. So you can listen to ongoing trends in the markets on Twitter. You can see what other people are doing. Okay. So these are the various ways in which you can listen. So Balbir, also one more place to get expert strategies, which Sumit, we were talking before this.
Yeah.
So I'll give out this idea right away because it is hypothesis building. It is going on TradingView and looking at their ready-made strategies, right? TradingView has an entire section called ideas.
Yeah.
Okay. There a lot of people share ideas, and you can easily get started. Ravi,
they have given their analysis as well on top of it. They draw trend line charts and everything.
Yeah.
So these are ready made, and you can just observe it, what exactly these guys are telling.
Right.
And then you can, build your own analysis on top of it, and then you can try to use it basically.
Exactly.
Yeah.
So in fact, most expert traders that I know or talk to, right, even if they don't trade something, they always go to TradingView and read about the latest trends happening there.
Of course, you never know, you can get some new idea from it. At the same time, you can also think from the other traders' perspective,
right,
that what kind of thinking they are building into the charts while they're reading the charts.
Right.
You can put that kind of analysis as well on top of those kind of charts. So yeah, it is always helpful to go through the TradingView and then look for the existing analysis that has been posted by the community basically. Yeah.
And also PineScript is a great
that's
resource.
one another thing. Yeah.
In Python, what would end up being, when you actually convert it to live code, it could be a 10-page long code, but in PineScript, it will be, to prototype it quickly, it will be half a page of code.
Yeah.
Some 40-50 lines of code and you're done.
And even if you, the people who doesn't know much about the PineScript, there are ready-made, codes which are already available. You can start with those codes, look for the results, and then you can build upon it basically.
Yeah. Ravi, we'll come to your question. I see your question. We'll just come to it. Let me just show PineScript here. Okay. So this year, I'm not advertising TradingView, but they gave a wonderful discount on Black Friday this time. So what their product, like 50,000 rupee product, was today. It was available just for, on Black Friday it was available just for 18,000. So here you see the familiar PineScript interface, right? Let me show you how to quickly get started. So when you open indicators in tradingview.com, it's not just indicators. It's literally you just type strategies here, and it will give you a whole bunch of strategies. Right?
Oh,
and
great.
all of these are written by, so you can see, 2,437 people have liked this monthly return and price slip strategies. So, I mean, take it with a grain of salt, of course. Everyone will advertise their own strategy.
Yeah.
If somebody's strategy was actually making money, then I don't know if they would have put it here, right?
Yeah.
But you will get a lot of great ideas from here, that's for sure. Okay.
Yeah.
A lot of great ideas. So you click anyone.
And honestly, guys, it is always recommended that don't blindly copy the strategies. You just have to, understand it. First, understand it, what it is doing, then apply your own analysis, and then only take the steps forward. Whether you want to go about it or you want to do some modification in it, and then only take the leap, I believe.
So from the chart, it looks like something I would not have done. Okay, this looks like it has too many indicators on it. So, but I would definitely still study because 4,000 people are talking about it. I may want to. So I'll create a working copy, and you inspect it, right? You'll see what it is doing, why it is doing. Now, code looks super simple. Huh? Guys, is the code visible? Yeah, I believe now it should be visible. Yeah. So
it's a moving average crossover strategy.
Oh, this is not. So he is not copied it properly. This is still moving average only, actually.
Yeah.
Okay. So that's you get the idea, guys, right? So maybe we will have we can have a separate session on trading view per se, but we'll go back to this thing. So you see how simple it is, right? So this is another way to start with the hypothesis building, right? Okay. So here we are. So now let's say we have a hypothesis. Let's say moving average crossover here. Okay. So then what do you do? Then you get the historical data, right? Because now that you have a hypothesis, am I looking for daily entry exit? Am I looking for intraday entry exit? Am I looking for slow moving stocks? Am I looking for fast moving stocks?
But then Nitish, here the question comes is historical data may how far look back period we should go about?
That's a very good question, Suman. Now, I think I've clarified this before, and I'll clarify this again. Because these are some basic things that people need to, observe. Back testing is not about generating historical returns.
Okay.
Back testing is about understanding if your logic works or not.
True. Understood. Yeah.
Okay. Not all logic will work in all market regimes. Okay, so if, say, for example, if I have a momentum following algo, okay, it will detect momentum and it will follow it. Or if it is mean reverting algo, the market should be range bound. So when the market is not range bound, I don't expect my code to work. Yeah,
makes sense.
Back testing is only about detecting what kind of algo have I ended up with. You may have started out writing a trend following algorithm, but because of something you messed up or somewhere that logically you went wrong, you have actually written a momentum based strategy. Okay. So you have to, it is backtesting is only to make you aware that देखो market was trending in this period and my algo is making money. That means that you made a trend following algo.
Yeah.
If you have achieved like the golden this thing, the holy grail, then you may have an algo which can both do momentum and trend.
Yeah. Okay.
But you will only figure that out once you test it on data that is from momentum, range bound or trend following.
Yeah.
Right? So that is the main thing with this thing.
Just one more thing you mentioned while you were speaking. You mentioned the word called regime. I mean, can you expand a little bit more on that?
Okay. Now, I'm sure you also have your definition of regime. I'll give you my definition of regime. Regime is a period in the market. Okay. And by the way, regime is also dependent on the candle size that you're looking at.
Okay.
Right? Because I may have a I may have a trending regime. Okay. But what if all my uptrends are in gaps?
Yeah, that could be possible. Yes.
I could have intraday sideways market, okay, for 5 days, but it always gaps down.
Yeah,
right?
Even that is possible.
Yeah. So for a given candle size, for a given time frames, what is the nature of the market? And I usually think of it as in two ways, right?
Yeah.
Up and down trend and sideways.
Okay.
So I look at a chart and I see if it
So in simple words, if I see is for a particular month, the momentum was actually upwards, and then for a couple of months it went sideways, and then the fourth month it went down. So I can clearly see that the first month regime was actually a trend. The next 2 months were actually sideways, and the fourth month was actually the downtrend.
That's how.
So that is called regime. Okay, fine, perfect. So I believe everybody understood what the word regime means in algo trading in this case. So whenever you do the historical backtesting, you have to look back for the period where there is a trend, upward trend, sideways, and the downtrend.
Yeah. Also, I think you can be casual with terms like this. There's no hard and fast rules here. If you have written an algo, okay, you can simply classify regime as it works for my algo, it doesn't.
Yeah,
that is a regime
true as well. Yeah.
Okay. The regime can also means, for example, we'll see very shortly that I may have a statistical arbitrage algo, or rather, market structure arbitrage, which works best, which gives me best result when there's low liquidity.
Yeah.
Then I will look at regime as liquidity regimes.
Right.
This was a period of very high liquidity in the script that I'm talking about. So, there used to be very high liquid regime for Yes Bank.
Yeah.
And then liquidity dried up for Yes Bank.
Yeah, exactly.
Right? So I can look at it as liquidity regime. Right? Ravi, will just take a small break and answer both of your questions. Yes, we have third-party apps for Breeze. But if you really want a recommendation, please check out Spring on icicidirect.com. You can go to icicidirect.com, go to FNO section, and in the middle you'll see the icon of Spring. That is our own in-house no-code platform, right? And if you want any help on that, we have a separate email ID for that, spring@iciciSecurities.com. So if you have any questions, queries for Spring using the no-code section on Spring, please write to spring@iciciSecurities.com. Also, Balbi's second question is, does it have integration with TradingView? We do not. We have TradingView charts, right? You see TradingView charts. Custom indicators are not allowed by TradingView for its charts on broker platform. You can only make custom charts on TradingView on TradingView.com, right? So that is a limitation they themselves have put in place. But to work, so we are going to be coming out with Ravi. Ravi, we are okay. Balbir, no, there are two people asking. I'm sorry. So I just answered Balbir's question, but Balbir also we are coming up with a WebSocket thing where you can put your JSON in TradingView alerts, and the TradingView alert will trigger a trade on ICICI Direct. Right. So that Ravi, that is not as TradingView charts are not refreshing automatically in website. That's by Mr. Blunt Truth. So Mr. Blunt Truth. I mean, usually we see customers say this where they have connectivity issues. Usually there's a connectivity issue because our data travels over the internet. So if individuals are facing fluctuation in bandwidth, then it happens. Especially mobile, by the way, especially mobile. In fact, even in our own office space, which is on the bottom floor of a building, we get very bad bandwidth. So to actually test our apps, we have to go and stand outside or near the entrance. So okay. So we'll get back to steps in algo trading, right?
Yep.
And again, if there are any specific questions, please put them in chat. We are watching the chat, and we will answer, right? So then now you have to get historical data, and also Breeze is unique in that we have historical FNO data.
Futures or options, especially for the options traders, yes. They are able to download. So how far back we can go for the options data? I believe it is something like 2017-ish or something.
No. That's spring.
That's in the spring. Okay.
On Breeze we have till 2013. In fact, I think 2012, but at least 10 years we have.
Great.
Yes, 2013 to hai hai. And So actually this fourth webinar in the series was going to be about downloading futures data.
Yeah.
Okay, but we took a step back because I saw the questions were more fundamental. So I have written code for downloading historical futures data, right? So I will be sharing, maybe I'll, depending on the interest I get from these, I'll just show you that it is there, right? It is there. Just that I put off the discussion of this in favor of a more fundamental discussion.
Yeah.
No, so this will be another tool. I'll put this in the shared repository. Right. So now you get historical data. Now you know, and unlike this thing, what many people do. Okay, and I think that's a severe mistake. Is that they torture the data until the data gives them some answer, positive answer. Okay, do not do that. Do not just torture the data until it tells you what you want to do. That's like, I mean, even nowadays they're not even torturing prisoners, right? That's why, because at the end of the day, by hook or crook, you can get what you want. Yeah. And it'll be some kind of a data fallacy. It'll be, what do you call it? Over optimization, curve fitting, and all these other various, fallacies you'll fall for, data science fallacies. So do not, if the data doesn't give you the answer, play with it, but don't torture it. Okay, change the candle size, change the look back period, but don't force that particular data to give you positive.
Yeah.
Right. So you may want to get you may want to use any data tool that you're proficient with, right?
Can you give some examples of what we can use in this case in order to refine our the data? Example maybe.
If you're still learning Python,
yes,
you can use Excel. Feel
fantastic
free to use Excel. Excel gets a bad name by experts, like people who become very very good at Python.
Yeah.
Then they start looking down on Excel. But guys, even those guys would have started with Excel only. Okay, nobody was born a Python programmer. So use Excel, use Google Sheets, use OpenOffice, Calc, whatever you have.
Yeah.
Okay, they're all equivalent. There is no difference. Okay, whatever you have. Okay, Renuka, we'll come to your answer in the next one, right? So now these are some beginners, right?
Yeah.
So if you're still learning Python, and guys, don't just be self-aware in that I'm not an expert in this. That self-awareness will go a long way. If you're just learning Pandas,
yeah.
If you have just made your first data frame, don't do your data analysis in Pandas. Learn Pandas,
yeah,
but do your actual serious analysis in Excel.
Excel. Right? Just to match it.
Yeah, just to match it. Otherwise, it will be two levels of frustration. Of course. I'm learning algo dating and I'm learning Pandas and I'm trying to do both of them at the same time.
Yeah.
Okay, it might get too much, right? And when I started using Pandas, and when I started using seriously Pandas, I did not trust myself. I used to do my actual calculation in Excel and then see if I could do it in Pandas or not.
I did exactly the same. First, I'll need to do the manual calculation on the Excel, look at the output, and then try to replicate it on the the coding side, and then see whether it matches or not.
Right.
So that's how you will get the confidence that whatever you have built in the the Python is actually the same.
Exactly. Then you'll never have a nagging doubt. You will like for 2 months or 1 month, whatever you decide. I did it both in Excel and Pandas, and now I can consider myself proficient enough to do in Pandas.
Yeah.
I'll stop using Excel.
Yeah.
Otherwise, you will always have a nagging doubt in the back of your mind. Am I doing something wrong?
Code barabar hai ki nahi hai.
Right.
The first thing.
Right. So, and now, and see, again, this is somewhere where I differ from the normal workflow, is that we have, even before going for backtest, I have validated my hypothesis somewhat at a broad level.
Yes.
Right? Because at step 2 itself, I'm ready to go back to 0.
Yeah.
Okay.
Yeah.
Backtest is a very serious thing. You'll have to go through every position, every this thing. You'll have to measure a lot of metrics: strike rate, hit ratio, best bad trade, best good trade. So backtest is a very involved thing. So even before going to backtest stage, I have already filtered out my hypothesis based on the data I have. Maybe I have 30-minute data when I actually need 1-minute data.
Yeah.
Right. If I have to change my candle size. So
yeah.
why go for backtest and then figure out my hypothesis does not match the data at all.
Yeah.
So I've already done my sanity check. After I'm done with the sanity check, now I go for backtesting. Right. In backtesting, I will always recommend that people start using an event-based CEP. CEP meaning complex event processing, right? Always use CEP. It will have a huge advantages. Um, CEP will, you and most good CEPs that are available out there, like Backtrader, you can also take live.
Yeah. Okay.
Okay. So the thing is that you don't have to rewrite your logic.
Yeah.
And rewriting your logic for live or for paper trading means that somewhere or the other there can be some leakage of logic.
Yeah.
That's possible. There is some, maybe there's some function which is supposed to calculate at this candle close, but you actually end up using next candle close, right? So there can be various kind of slippages. Okay. So just a word for those of you who are not aware of what event-based engines are, right? So an event-based engine is where you usually write your logic in a separate function.
Okay.
And then that engine, it gets the information of an event happening. Okay. One time when I said this, on stage, somebody thought it was news event.
Okay.
It's not news event. It is data event. Okay. When a new tick comes, that's an event.
That's an
For
event.
my event.
Okay.
Engine, right? So when that new tick comes, then my engine runs this function, and that function decides ki signal generate karna hai ki nahi karna hai, whether to generate a signal or not, whether that signal will be a buy signal or sell signal, and then if an order is placed, it places the order.
And then again the next tick comes.
Yeah, and all of this has to be done before the next tick comes.
Yeah. Yeah.
Okay.
Yeah.
So that engine is powerful enough to run everything between two ticks.
Right.
Okay. And it also handles trade events, like for example, order fulfill hua ki cancel ho gaya ki kya ho gaya. So
Right.
those are also events for my event-based engine. So these are event-based engines, right? So if you write it like that, then what it does when it's backtesting, it will take the CSV, okay,
Yeah.
and then the other part of the engine will throw the data one by one to my event.
To the event. Okay.
Okay, and that function will run as if it was running in live market.
Right.
Okay. But of course, it will be much faster. Like if it's a 1 minute candle,
yeah,
it will throw like 60 or 100 in 1 second, whatever the processing speed is, right? So it's always better to backtest with the right backtest with an event-based engine. There are many out there. Backtrader is my personal favorite. Blue Shift is about to come out, and there are many others. Zipline is also available.
Yeah.
Okay. So then the fourth step is backtest with various permutation combinations. So for example, I've written something with a simple moving average. Okay.
Yeah.
Now, is my simple moving average on looking back 10 days or 20 days or 30 days?
Yeah.
Okay. That is one parameter, right? My look back period. If I'm using something like, it's a EMA, then how many
average? Yeah.
What is my exponent going to be?
Yes.
My weightages.
So which means that I'll need to try and test out with several different look back period, and then check the parameter on EMA versus SMA, and then play around with those numbers.
Exactly. So look back period and weightages of your indicators are going to be one major thing.
Yeah.
The other major thing that you'll play around with is the candle size. Right?
Yeah.
So there may be trends that are forming at a day level, but they don't form at minute level.
Yeah, that's true. Yeah, that is possible.
Right?
Yeah.
Like we just discussed about regimes, right?
Yeah.
My intraday regime is sideways, but my overall regime is downwards.
Right. मतलब in simple words, 1 मिनट के कैंडल पे बाय सिग्नल आ रहा है, बट डे कैंडल पे बाय सिग्नल नहीं आ रहा है.
Like that. Right. Yeah. Okay. Then once you have backtested with various permutation combinations, another thing that we need to be sure about at this stage is whether I'm overfitting.
Okay.
Have you heard what overfitting is?
Well, it would be nice if you can explain that. Okay.
So overfitting is a very common mistake. Okay. What happens in overfitting is that, let's say I find that I'm writing in PineScript and I find out that my 45-minute candle works best for me. Okay. But I should test it out, and on PineScript this is possible these days. I test out 46-minute candle and 44-minute candle also. Okay. Now this becomes overfitting. No. Once I test on 44, 46, my output for 44, 46 should be only slightly worse than 45. Yeah. Okay. Yeah, I'm getting it. Yeah. And then if I test again, if I'm meticulous, I run it for 47 and 43. 43 as well. So my peak should be at 45, but
Right.
around it should be a smooth descent.
Right. I'm getting it.
If my 45-minute candle was amazing, okay,
Right.
but 46 and 44, it's like
Very
very bad.
Yeah. So it needs to be very close to the hypothesis that you have actually built.
Yeah.
So numbers around that should be closer to it, not exactly like that, but it should be very close to it.
Very
So
close
which
to it.
means that whatever you're building is actually makes sense.
So if you look at it, I mean, I don't know.
I got it.
If you want to think of it this way, but if people who can think, visualize it, it's like a function.
Yeah.
Okay. My function should not have a spike at one point.
Right. Which means that it could be an outlier or it could be just one-off event.
It could be that just because I have this range of data, that's why I'm getting it. If I, you know.
Yeah.
So actually, in mathematics and in like affiliated applied mathematical fields, there's got over sensitivity.
Yeah.
So oversensitivity of a function to a particular value is a sign of overfitting.
Overfitting. Yeah.
Okay.
So understood that. Yeah.
So
thanks for explaining overfitting. Yeah. And I believe the same goes with underfitting as well.
Yes. There could be underfitting also. There could be underfitting. Well, underfitting means that you just have not found the optimum yet.
Okay.
So underfitting would be something like if you're testing 46 and 44 and you found out 46 is actually better than 45.
Okay.
Then you're underfit basically.
Then you're underfit the data.
Right? That's not optimized. Right? Now, once you're done with all this analysis in backtesting, right? You figured out that it works well, gives you good signals, and then that the regime from the backtest. Again, go back to the earlier part of this, that we already discussed, and then you can consider overfitting. Now you go for coding for live. In coding for live, and this is a very common mistake I've seen in beginners. They write too much code. Okay. And people usually write too much code because they don't know how to code yet. Okay.
Right.
That, so it's like, it's like those common programmer humor type things that you have nested, if then you have like 6 nests.
Continuous 6, yeah.
Okay. Or if you have like, too much, too many very highly specialized functions for something.
But then these things will come with experience, right? For the beginner traders, because if they are traders, they are not programmers, then they will start writing these kind of codes, and then over the period of time, when they will learn that these codes are actually consuming a lot of time to execute, then in order to shorten the time, they'll have to learn for new
I can give you 2 tips, Sumit, which even you can use.
Yes.
To shorten the time period needed.
Very much appreciated if you can share those.
Okay. So you remember in school how you improved your English?
Yes. I mean,
it's also language, right?
Yes.
With exactly the same goals, right?
Yeah.
So we improved our English by reading good English.
Yeah.
Okay.
That's true.
And then we improved our English by talking to people who had good English.
Right. And then using the specific words which makes, which can squeeze down the entire sentence into just word or something like that.
You're getting crisper communication.
And at the same time, you're conveying the entire message.
So, okay. So there maybe as a third thing that we did. We did dictionaries.
Okay.
What is the dictionary for programming languages?
It's a set of
it is a
documentation.
Documentation. So whatever programming language you're using, make sure you go through the documentation.
Right. Absolutely.
Just like you did for APIs.
Absolutely.
Okay. Go through the documentation. I'll give you wonder thing. In this, this function was actually originally, I mean, it's not anymore, but it was a part of the iter tools library of Python.
Right. Yeah.
And I did not know this existed.
Okay.
And I had written 40 lines of code.
Or just this 5 lines of
4 lines.
Code. 4 lines of code.
What can be done in these 4 lines? I was doing over 40 lines.
Right.
Okay.
So that's how important it is to read the documentation in order to come up with a very concise and the short code, crisp code basically.
Because many problems, see, most programming problems will boil down to data structures and algorithms.
Right.
Okay. So most your important data structures and algorithms have already been answered by the standard libraries and standard templates.
Right.
In C++, they're called templates, right?
Right. Yeah.
So they're already sorted. Somebody has already faced that problem and he's already solved it, but you don't know that he's done.
Yeah.
Okay.
Yeah.
So now we have three methods to speed up our learning process of the programming. One, we read the dictionary first.
Right.
Instead
Which
of saying
means documentation, we have to go through the documentation. That is a must-have.
Yeah.
Right. Then,
like if for example, if you didn't know that there was a word called circle,
right,
how do you describe it? It'll take you a page.
Exactly.
That it is a continuous line that loops over itself and has,
Right.
doesn't.
That's a
What
very
else?
nice analogy.
Yeah. So first is read the documentation of your programming language itself. Second, freely go and attempt the problems that are given in this thing. आपके what was that Stack Overflow.
Stack Overflow. Okay. Yeah.
Okay.
Lots of problem can be solved. Have been solved by lots of people over there. Basically.
You know what? This is one guy in programming humor who actually made a very good point. A lot of people, you know how they solve the problem?
They just go to the Stack Overflow.
No. They go on Reddit. They go to the subreddit of their language, like Python.
Yeah.
They write their problem there.
Right.
Okay. But of course, nobody will take interest.
Yeah.
So they make another account and they write the wrong answer.
Right.
Okay. Then a lot of experts will come in.
The
experts will come in and say, hey, you're wrong, because everybody loves.
That's a nice way of doing.
Yeah. Because everyone on the internet wants to show that you're wrong.
Yeah.
So that's a great way of getting your problem solved, right? And also meeting new programmers.
Yeah.
And of course, practicing it, right? So write it and run it. Then you can paper trade, okay? And then you can go live. And in going live, since you're a beginner and this is the first few algos that you're taking live, go without leverage, go without pyramiding, and go with very, very tight risk controls. Okay. Now, Sumit, have you ever wondered what pyramiding is?
Not really. I mean, it would be nice if you can explain that.
Right. So pyramiding is very strictly defined as leveraging your unrealized profits. Okay. So say for example, if I'm trading a strategy and it's already in the money,
okay,
then I put more money in,
okay,
as if that was a realized profit.
Okay, understood. Which means that you have already assumed that the profit has been realized already,
and then
you're putting more money into making more.
Yeah.
Okay.
Yeah.
So basically, you are adding more on top. So basically, you're making a pyramid. Yeah. Now it makes sense.
Yeah. So do not pyramid. Okay. Do not count your chickens before they hatch. Okay.
And one more thing. I mean, you're saying that you have to go live without leverage. So without leverage means that you just have to consider it as an actual pot of money that you're putting into the market, rather than using a leverage.
Yeah, exactly.
Okay.
Try to avoid margins. Try avoid
So if you're
margin.
taking a 1 lakh position, then definitely you're taking a 1 lakh position, which means that you're putting 1 lakh cash from your own pocket.
Yes.
Assuming that.
Yes. For the beginner.
Okay.
For the beginner, and this is again something I like to say.
Yeah.
Okay. I have said it, I think, a couple of times earlier in the same series.
Yeah.
If you put in the money,
yeah,
and you are thrilled when the trading happens, then stop trading. Trading should be boring. Okay.
Yeah.
If you start getting excited when you're making money, or you start feeling sad when you're losing the money, that means you do not have confidence in your system. You have played a tukka, a bluff.
Right.
Okay, and you're just happy to see it winning.
Right. Okay. Basically, you're saying that you need to take the emotions out of it and let your system do the trading and trust it. Basically,
not trust it like like
not
blind faith.
Not
blind faith. You should see most good algo traders that I know, that I talk to. Okay, and I've talked to quite a few, and some of them do coding. Sir Balbi, sir, you're asking if if it's necessary to program. No, you can do it through no code kind of systems too, which you should try out Spring that we have, but there are many no code systems. So coming back to most of the good algo traders I've talked to. And when I think our marketing team was online because they wanted to see what the demographic is like.
Right. Yeah.
You know what this? Hands down, coders and non-coders, they all said, "Ki." So the question they asked was, "Does trading excite you?" They said absolutely not. I just feel fulfilled that जो मैंने सोचा था वो हो गया.
Okay.
Like what my hypothesis was, that came true, and that's my only pleasure.
Okay. Okay. Now that's a nice way of putting it.
Yeah.
Yeah.
Yeah. So yeah, if
So then in that case, you're not thinking about money. You're not thinking about that you want to make big stash of money in this kind.
It would
so
be
you're
like
just like focused. My code is working, and this is what the output I was expected. I was expecting, and this is what I'm getting.
It would be like when the first Tata Nano came out of Tata's factory and how Ratan Tata would have felt.
Right.
That I wanted to make an engineering marvel. I wanted to make a 1 lakh car. I made a 1 lakh car.
That's it.
That's it.
Simple as that.
Simple as that. Ratan Tata is not thinking about how much money Nano is going to make.
Yeah.
Right.
Yeah.
So Algo should be like that, right? So we're still on the first slide only, and we have 15 minutes. Where we have only.
I mean, yeah.
So how to build hypothesis? We already touched upon this a little bit. You should play to your strengths, whatever your strong point is. If data science is a strong point, then go with the data science based system. If you're great, if you're already like say for example a market risk manager or a credit risk manager, maybe Black-Scholes approach would be arbitrage would be a better approach to it. So build hypothesis in whatever field you are good at. Of course, indicators of everyone. Okay.
Yeah.
Read everything you can. Read everything you can get your hands on. Try out ready-made strategies. We already talked about this. Also, when it comes to indicators, Renuka ji, like you have asked, give us 2 good indicators. See, Renuka ji, indicators. How do you think about indicators? Right. That also matters. Right. So I'm going to cover that. So point is that indicator is nothing but a smoothing or a weighting technique. Okay. You want to introduce more recency bias to your algorithm, move from simple moving average to exponential moving average, right?
Yeah.
If you want to, have a slower moving average, if your algo is over trading, means it's taking too many trades.
Yeah.
Okay. You further increase the look back period so that it is smoothing more slowly.
Yeah.
Okay. So indicators, different indicators work in different scenarios. Now, when you get started and you're faced with like 60 indicators, आजकल तो trading view पे तो you have hundreds of indicators.
Yes.
भरे पड़े. So when you're faced with that, it kind of helps to have a mental map of indicators. Okay. So you can think it helps to classify them. Now I'm going to present to you one. So let's come back. That's later, right? So right now we're still talking about algorithms. But okay, now here it helps to classify them.
Yeah.
Have a mental map of indicators. So and this is one categorization I'm showing you here. On different sites, you'll see different categorizations. That only means that you have to come up with your own, or feel your way around it, right? So you will have some trend following indicators. You'll have some momentum based indicators. You'll have some oscillators. You will have some volume based indicators.
Yeah.
So in a way, what happens? So I think
you need to have that mental map basically.
Yeah. And then when you write an algo, then you can say, I'm using a trend following indicator to figure out entry points, and I'm using a momentum based algorithm indicator to tell me when the momentum has stopped so that I can exit.
Exactly. Yeah.
So now I can, I have relative more comfort with my algo. I'm not just saying that I'm using bands to enter and RSI to exit.
Yeah.
I'm saying something like a trend follower to enter.
Yeah.
And an oscillator to exit.
Yeah. And both needs to be used together, right? As well,
right.
While your algo is running or backtesting at the same time, right?
Right. Yeah. So similarly, you can also have, in this case, I've told you that one to enter, one to exit.
Yeah.
There can also be combinations like, okay, an SMA tells me that an SMA crossover tells me that this is an uptrend.
Yeah.
But I will use a channel to confirm that.
Yeah. So on top of that, you can use the third indicator to confirm that whether this makes basically to add a little bit more probability to your success. Basically.
Right. So you can use it as support. You can use it as a negation also.
Yeah.
That if my SMA goes up but my trend doesn't go up, I will not enter at all.
Yeah.
One indicator has cancelled the other one.
Yeah.
Okay. So you can have.
Yeah. I mean, this makes complete sense because lots of people, they have been using the basic recommendation is that maximum you should go about 4 indicators or max 5, not more than that.
Yeah.
Because after that analysis too much analysis, over analysis could happen.
Yeah. That's a very good point, Sumit. So, for example, Sumit, like SMA. Well, SMA has only one variable, right? Look back period.
Yeah.
Okay. Now you introduced EMA also.
Yeah.
Okay. That has two variables.
So now when you try to tweak the parameters, you'll have,
all permutation combinations
yeah,
of these two
yeah,
look
yeah,
backs
yeah.
and weightages are
So basically it is like 2:n.
So it
multiplies.
It just exponentially grows enough.
Right.
And on top of that, then I also have to see the this thing candle size.
Yeah, that's another thing. Yeah.
What if SMA on 1 minute candle and EMA on 2 minute candle? Maybe it works, but you have to try it, right?
Yes.
All the permutation combination. The problem will get out of hand for you.
Yeah. So that's why it is recommended that you have maximum 2, 3, 4.
Yeah.
And at a stretch you can go with maximum 5, and that's it. I would is all recommended basically. Okay, so Renuka ji is asking a very specific question, right, Sumit, though, that what are your favorite? So maybe you should give a specific answer. I mean, it's okay to tell them, right? Right. So I'll tell you what my favorite 2-3 indicators are. One is multiple moving averages. Okay. And I use, I've shown you that a couple of times, right? Yeah. So for me, logically, multiple moving averages with 1 week, that means 5 days. 2 weeks, that means 14 days. Okay. And then 1 month meaning 21 days. Right. Or something like that. You may think that 10 should be 2 weeks. That's fine. Whatever. So multiple moving averages with some logic for the window size. Right? Look back period. That is one favorite indicator of mine. Second favorite indicator is Keltner channel. Keltner channel. Okay. And third favorite indicator is RSI. Relative strength index. Okay. So I feel that most of the times I can make some combination of these work in non-volatile stocks. Yeah. Okay. Yeah. If it's a volatile stock that a lot of people, a lot of operators are jumping in and out of, then I may not. These will not work. But and yours, Sumit? Mine, the favorite one is Bollinger Bands. Again, it's the same moving average because it has all the 3 moving averages. But the important part in the Bollinger Band is that you need to look at the upper band and the lower band with either 1 standard deviation or 2 standard deviation. I normally go with the 2 standard deviation because when there is a trend, by the time it touches 1 standard deviation, the people also start jumping in, and it goes all the way to 2 standard deviation. Okay. So I normally follow the 2 standard deviation rule. So I mean that's my personal. It may or may not work for you. It depends upon you. So whenever it touches the 2 standard deviation, I wait for a while, and then I look for a signal when it reverses back to come down to the central line, which is the moving average, basically. Okay. Yeah. Great, so great. That's okay. So when it goes to the edge, you expect reversion until it comes to the mean line. Mean line, yeah. Okay, and then that's your exit point. Well, that's the first point where I need to exit. But if it goes down below the moving average, then I'll have to re-enter the trade. Okay. And then when I re-enter the trade, I expect it to go all the way to the bottom line. Okay. Because sometimes what happens is that it reverses from the moving average, the middle line. So it reverses from there. So that's the first point where you have to exit the trade. And if it gives you another signal that it is now going towards the bottom 2 standard deviation, then you can re-enter again. So I use Keltner similarly, but I use Keltner in the opposite way. Right. That when it breaks the upper channel, right, it's a good long signal. Right. When it breaks the lower channel, it's a good short signal. Right. Usually people use the middle moving average as the exit point. I don't do that. Right. I use the opposite side as the exit point. Okay. No, that's fair. Yeah. I mean, you have to try out several possible combinations that suits your requirement, because that's what the technical analysis is all about the indicators. Yeah. You have to try it out. So again, coming back to so I hope that any others. I mean, the ones that you have already mentioned, these are the popular ones, and these are the favorite ones as well. Yeah. To start with. And then if you go deep down, there are plenty other ones. I use personally, the Fibonacci extension as well. Okay. Just to get how much more the price is going to jump or going to bounce back. Okay. So in that sense as well, there are a few more as well. I mean, but these are the popular ones that I normally use. Yeah. So we can see. Yeah. So, this was, we was going to be about algos, but we jumped into this thing. So let's revisit algos. So this is the important part, right, guys? So
How to build a hypothesis. Now we have said look around data science, maths, read everything you can, try out ready-made strategies. We showed you earlier that tradingview.com is a very great place to find trading ideas. Again, like indicators, it helps to categorize algo trading styles mentally, right? So that you have a map. You know what you're doing, and you will not go too far from it, right? Although some of it is intersecting. We'll see how. So, for example, so we have technical time series, right? We already discussed technicals. If you're starting out in algo trading, that's probably exactly what you will. Renuka ji is asking what channel, sir? It's Keltner channel. Okay.
Keltner.
Yeah, let me just add a new slide right there. So we discussed indicators. Our favorite, okay? It's not global. So we talked about Fibonacci. What is that?
Yeah, FIBONACCI, बराबर Fibonacci extension.
Extension. Okay. We talked about
Bollinger Band.
Bollinger Band.
And Keltner channel.
Then RSI.
RSI. And then moving averages.
Moving averages. Multiple moving averages.
Multiple moving averages.
So I hope, Renukaji, you can probably take a screenshot at this point. For intraday, what do you suggest? Is it specific for intraday?
I mean, all these indicators work intraday as well. It's just that you have to use a specific time scale because during the daytime, market doesn't go just one direction. I mean, especially if I talk about indices, it goes in both directions. So all of these indicators, they work during daytime as well. It's just that you have to pick and choose your time frame. Not necessarily it could be 5, 10, 15, 20, 30 minutes, 1 hour, 2 hours. It depends. Sometimes, during the day also with these kind of indicators, you won't get even a single signal throughout the day. So even no trading on a single day is also good.
No trading is also trading. Okay. Trading is also a strategy that I will not place a trade today because today my market is signal नहीं generate रहा है. See, again, like I said, backtesting is about what? Is about determining regime. Okay. And when your regime isn't present, you should lose money.
Exactly.
Right.
Exactly.
So whether your strategy is intraday or not, it doesn't matter. Right?
Yeah.
It doesn't matter. And guys, if you seriously start doing all these things we're talking about, like backtesting and strategy hypothesis testing and all that, you will find yourself becoming more at peace with not trading.
Yeah.
You will not have the fear of missing out. FOMO.
Yeah. I mean, trading shouldn't be that that dynamic where you are just entering and then sitting on the table and then continuously going out of the trade and then again entering. So it should be very smooth, calm, आराम से.
Again, when you're looking for that word, I wanted to say gambling.
Okay.
Because this is another favorite thing of mine to tell you guys. Guys, trading should not become gambling.
Yeah,
gambling is degenerate.
Absolutely.
Okay. If you treat the market like a casino, the market will treat you like a gambler and it will take your clothes off.
और ट्रेड लेने से पहले आपको पता होना चाहिए कि आपको किधर निकलना है, किधर आपका कितना प्रॉफिट मैक्सिमम होने वाला है और आपको कितना लॉस होने वाला है.
You should be perfect certainty. Okay.
Stick to it.
Your profit should not come as a surprise. Your loss should not come as a surprise.
Exactly. Yeah.
Okay. If you treat the market like a casino, it will treat you like a gambler. If you treat the market like your college, you will learn. And then, guys, when you worked hard through college, when you ended college, your career was an exponential graph.
Right.
But then you were not putting your money on the roulette wheel and jumping up and down like crazy.
Yeah.
When you're working, people come in and give you offer. Take this 30% more salary and come work for me.
Right.
Money comes to you.
Yeah,
okay. When you're a good student, the money comes for you.
Exactly. Yeah.
Okay.
Right. So I think we'll have to go back to our presentation.
So So then again, let me quickly see. So you have time-based technical indicators. You have factor investing. Now this, Sumit, is the most underexplored algo I've seen in India.
Okay.
Nobody even talks about fundamental data. Nobody talks about factor investing.
I don't know about factor investing. If you can explore, explain just in one line.
Factor investing is something that has Nobel prizes on it. Not one, at least two Nobel prizes have gone towards fundamental theories about factor investing.
Okay.
Okay. So basically, what it is that Mr. Markowitz, in the 1940s, he came up with the idea of risk and reward being balanced.
Okay.
Risk and returns being balanced.
Absolutely.
Okay. So he was the first person to propose that. And he showed that for any portfolio of stocks, okay, for any portfolio of stocks or even different assets, okay, even if you include fixed deposit and bonds, that your returns, risk and return will be on a parabolic curve.
Yeah. Now I recall when you mentioned the word, the gentleman Markowitz, I recall the exact graph.
Yeah.
Yeah.
So he just made one factor that your return is equal to a function of your risk.
Yeah.
And that's when we got that misunderstanding that profit के लिए risk तो लेना ही पड़ेगा ना. But actually nobody remembers that is a parabola.
Yeah.
So after one point, extra risk will only get you very little return.
Yeah, absolutely.
Okay. So very high risk and very small returns for your extra risk.
Yeah.
Okay. So now coming back to factor. Then there were some gentlemen who came along and said, gave us a modern portfolio theory.
Yeah.
They introduced 3 or 4 more factors.
Yeah.
Both of these groups of gentlemen got Nobel Prize.
Yeah.
Then came people who came in and threw in many other factors. So now we have like 4 factor FPT, and then you have N factors. Nowadays, you will see actual profitable models running with 27 factors.
Wow.
And they will include not only just statistical stuff like standard deviation, not just fundamental ratios like PE, but it will also include some of the indicators also.
Okay. Wow.
Okay. Technical indicators.
Yeah. Okay.
And your holding period will be like 18 months, 22 years, like that. So it's proper investing portfolio management.
Right.
Okay. And I've very rarely seen anyone do it. So guys, feel free to expose. By the way, we are also coming up with fundamental data on Breeze. You should be able to see your basic PE ratios, and your earning statements and all that on there. So you can easily do factor investing with Breeze. Next, you have arbitrage. So this is for the more mathematical of you people who can do some what is that Dickey for augmented Dickey Fuller test for day trading, ADFT, or you good with the calculus and you can do Black-Scholes and you can quickly calculate your IVs so that you can see if any option contract is mispriced. Right. So that kind of statistical there's a put call parity is being followed. Okay.
Yeah.
You'll have to write really optimal code for real time figuring out.
Yeah.
Okay. Then you have rule-based, which is arbitrary. So we discussed 920, right? You do a short stack at 920, and then you exit at certain rules.
Yeah.
So this is when you automate some arbitrary rule-based systems.
Yes.
Okay. This will also apply to any of you who does this. इतने बजे market में ऐसा होना ही है.
Yeah.
So
आज की डेट में होता है जो कि 2 या 2:30 बजे के अराउंड जो मोमेंट आता है, especially in indexes.
Yeah.
So people are expecting, and
tomorrow you're doing expiry trading, right?
Yes, I am.
Tomorrow, day after.
So tomorrow will be Monday, Tuesday. Today's Tuesday, right? Wednesday. Thursday will be
Thursday. So guys, you can watch Sumit trade in real markets on Thursday. Lastly, your sentiment analysis. This is the most cutting edge strategy type. Usually you have to combine this with certain other strategies. You don't just do sentiment on its own.
Yeah.
Okay. That's I'll give the reason why is it not done on its own, because the data is usually slow moving data. Okay. So data will be like what was the sentiment of the MD Q&A in the quarterly results. Okay. Or what did the US Fed release sentiment say about coal industry?
Yeah.
Or steel industry?
Yeah.
So these will come out like, although global events keep happening, but something that is relevant to your stock may happen like once a day or twice a day max. Right? So you don't do intraday trading based on this, but maybe after today's market close, there was some SEBI put maybe Ministry of Finance put out some new tariff on imported steel. So now you can expect tomorrow there to be an uptrend in your steel stock. So therefore, the sentiment is positive tomorrow for your thing.
Yeah.
So you do intraday trading based on the sentiment, but then intraday also you'll have some kind of indicators and stuff, right?
Yes.
You'll have some entry exit conditions.
Absolutely.
Right. So that happens. So sentiment analysis is usually combined with something else. And also second thing, indicators are applied on the sentiment data. You don't apply the raw. You don't use the raw sentiment data.
Okay.
So if your sentiments were going negative, right? So then you have to do some kind of a moving average on the sentiment data also, right?
Yeah.
Right.
Yeah.
So my sentiment is slowly turning from positive to negative.
Yeah.
So then you have some kind of indicator has to tell you that. Absolute data will not tell you that. Right. So we already talked about indicators. We'll just come to what your goal is, right? We started about talking about chairs.
Yeah.
Right. That when you're carpenter, when you're given tools for woodworking, you have to visualize your end product before you start.
So
right?
that end product is supposed to be an edge, right?
Edge.
Okay.
It is do not rest until you have an edge. Okay.
So basically, you're saying that the chair that I visualized should be unique in its own with the rest of the chairs that are available out there in the market.
Right.
Fine.
Right.
Got it.
Yeah. Otherwise,
that's a nice way to put, in a simple language to easily visualize and understand, especially for the audience, that whatever I'm thinking should be unique from what all other people are doing. Basically.
Yeah. So in case, say for example, you copied a trading view strategy.
Right.
Okay. And you ran it just as it is. You just tweak the parameters a little bit, and now it looks like it is giving you a positive return.
Yeah.
That's not your edge.
Yeah. That's just working on something already existing, and people like you must have already done this in the past.
Yeah. So the most common, and if you talk to algo traders, you'll who have been in the market for like 10 years, they'll normally it will be very normal to say, no boss, this strategy has been traded out of the market.
Yeah. Somebody has also already tried, tested, and it has phased out.
Not just somebody. Now entire market is doing it. Nowadays, some people are saying that about 920, right?
Yeah.
Hey, everybody is doing 920. So I should try something else.
Right.
So
which means that at a particular time when you're getting a signal, everybody else is getting the same signal. Exactly.
Everybody's seeing the same thing.
Exactly.
And
so what is unique in that?
Exactly. And that is actually, it is said that it is a sign of a mature market.
Yeah.
That the simple strategies have been traded out.
Yeah.
Okay. So where to find the edge, right? And so therefore, it's a very common statement. Edge to mysterious. It's like a mysterious quantity that is there. No. Very simple edge that anyone can get into their strategy. So your logic, when you write your logic, it will easily take you. If you write, combination of 2-3 indicators, and so feel free to try that. We can talk about it again.
Yeah.
You will easily get 50 to 50% strike rate. Okay. It's like coin toss.
Yeah.
Any day.
50-50 a coin toss.
50-50 and
straight away. Right from the very first coin.
And the thing is that, see, in general, anything they say about stock markets will finish up fast.
Yeah.
So this is the last thing we're talking about. So very common thing to say about the markets is that market to upar jani hi hai. Like in general, the world is growing.
Yeah.
Right.
Especially with India, we are a growing economy.
We are the fastest growing economy.
Exactly.
Right? Fastest growing big economy.
Yeah.
Right. Yeah. So the whole world is going in a direction of progress. So even at 50-50, even if I take long only positions, I will be more than 50% of the time I will be right.
Yeah.
Right. So that is not the edge. But what gives you the edge, what can easily give you the edge, is when you're wrong.
Yeah.
Doing the right thing when you're wrong.
Yeah.
When you're wrong, if you have the right position size and the risk management, if you have a good stop losses in position, if you have good trailing stop loss or something like that, that can easily take you net positive
through the right or whatever the downturn that is happening. You will still be able to survive, and then you'll still come out positive.
Exactly.
When the things turn
exactly
in your direction.
Exactly. It's like Monish Pabrai wrote a book called Dhando Investor.
Yeah.
Okay.
I have read that.
You have read that?
You only mentioned this. This is a nice book. You have to go and read it, and I have read it.
Yeah. And Dhando Investor, he emphasizes in every chapter.
The US.
Yes. About
Motel.
What is the name here?
Patel. Yes, Patel guy goes to the US and does the motel business.
Yeah. So he in every chapter he's emphasizing one thing. That no matter what risk he took, he always had a fallback plan.
Yeah.
They always had a fallback plan, and every risk they took was very measured with very high reward and very low downside.
Yes. Perfect. Yeah.
Right. Yeah. Similarly, you think of a trade. Every trade that you take should have a high probability of winning, but when it's wrong, it should not have a high.
It should not have. Yeah. it should not wipe down your account or anything like that. You still be able to survive and be able to take another trade.
Right.
Yeah.
And again, so guys, I've given you the industry example.
Yeah.
Okay. I've given you
Markovitz,
Markowitz,
risk rewards.
risk reward. That's an academic proof, and and then we have that casino example, right?
Yeah. Yeah.
Right. So just your tight risk management can become your edge.
Yes.
So,
Absolutely.
guys, I have given you the
Especially,
ultimate holy grail.
and this is very much true in options trading because I trade options a lot. Nitish does that as well. Options trading mein position sizing and risk management is very much important. If you have that figured it out before taking the trade, you will write the the ups and downs that happens on a daily basis.
Yep.
And you will be able to make money in that.
Yeah. In fact, options are designed for that.
Yeah.
Are designed to reduce the risk. So, guys, if
Yeah.
you're losing your shirt in option trading,
Yeah.
then you're not using options literally the way they're structured.
Yeah. Yeah.
It has a limited downside.
Exactly.
Right. So, guys, we have ended this thing with giving you the chair, the end material, the end goal of algo
Yeah.
trading. That is the edge, and even in the edge, we have told you exactly where you can easily find the edge.
Yeah.
Risk management, position sizing. Period.
Right.
And Sumit, remind me, I'll do an extra webinar on just position sizing, risk management, and algo trading.
Will remind you.
Yeah.
For sure. Yeah.
Yeah. Okay. Thanks, everyone.
Thank you, everybody.
I hope we have. Lastly, Balbir ji has recommended that intraday VWAP is a good indicator. What is your view? Sumit, you have a view on intraday
VWAP indicator is really very good. I use it personally, but I use it in a different way because I trade a lot on the option side. VWAP I normally use on futures, and while looking at the futures, I trade options. So whenever the market is moving above VWAP, I normally tend to have understanding that it will remain on the upper side. But if it breaks down, I use it for shorting. On the other hand, I also use VWAP as a different tool, especially for the last half an hour.
Okay.
Last half an hour may it is the prices tends to be volume weighted price, and it settles down completely different than what is actually shown in the on the screen. And lots of people, they don't know about it. Okay. Even the 5 paisa difference could make a lot of difference, especially on the day of expiry. Jahan pe it could end up in the money. And when it ends up in the money, you have to actually, whether you have sold or whether you have bought an option, you have to actually deliver the shares or you have to purchase the shares in that case. Especially that happens in the stock market, physical settlement. So that makes a lot of difference. So VWAP is a really very good indicator, and I personally use it, especially on the expiry day, especially during the last half an hour. And people, you should explore a little bit more on that side. And I believe I'll be doing one session on that particular topic itself. So
on VWAP itself.
VWAP itself, yes.
Wow.
I will be doing that. I will explain the entire logic, how the calculation works, how the mathematic works behind it, and how you can build a logic around, especially for the last half an hour or last 15 minutes, basically.
Balbiji, please put something in the chat so we know you are here with us, because I'm going to tell you something very interesting.
Yeah, yeah.
Something that you may incorporate into your analysis using VWAP.
Yeah.
By the way, I personally do not use VWAP for trading purposes. Yeah. Okay. But you know what globally VWAP is used for?
No, maybe you can tell me.
Institutions use VWAP for managing their portfolio.
Okay.
So, say for example, I am ICICI mutual fund. Okay. Yeah. And one fund manager is saying, I'm going to sell all my 100 crore of Reliance.
Okay.
Okay. So then, when that 100 crore rupee worth of shares comes to the broker, the broker uses VWAP Algo to sell.
Okay, now I got it. So we have a tool called
no, not that. I'm not pushing that. This is pure theory. Okay.
Okay.
So that algo that will sell that 100 crore worth of Reliance share.
Yeah.
Its only work is to stay with that day's view, not go above the VWAP when it's selling the shares.
Okay.
Not go below because it's selling, right?
Yeah.
So you want to get share 100. If you have 100 crore, you will probably want to sell it worth 101 crore that day.
Of course.
So you will not want to go your price to go below the VWAP price.
That price, right?
So buyers and sellers in institutions, they're always concerned about this.
Yeah.
They will always
want to maintain the tight range basically.
So if I say the mutual fund manager, he gives those shares to us, our institutional arm to sell.
Yeah.
At the end of the day, he'll come to the institutional arm and he will ask, what VWAP did you get me and what was the VWAP in the market?
Yeah. Absolutely.
Okay.
Got it. Yeah.
So if you're looking at fundamentals,
so that's a practical example. Yeah.
That determines. So that is how VWAP is powerful in fundamentals, in stocks, single stocks. So see if this fits in because this is core supply and demand.
Yeah. Yes. Absolutely.
Okay. With that, we'll say goodbye to our friends.
Yeah.
And friends, Sumit is going to be doing expiry trading on Thursday, and he's going to be doing a hand-holding session on Friday. So if you have any, call me up if somebody from this webinar shows up.
Yeah.
If you have any problems, Sumit does this every Friday, and the link is always there in our Telegram channel.
Yeah.
Okay. So guys, we'll see you very soon. Yeah. Next time we'll have a coding video for you.
Fantastic. Right? Thank you very much, everybody.
Thank you, everyone. Bye.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.